Hey, what's going on everyone? CryptoVatsik here with another technical analysis video for you. And today I'm going to be covering Fetch.ai. If you enjoy these videos, I would really appreciate it if you smash the like button and don't forget to subscribe to the channel. As always, nothing of what you're about to see is considered financial advice. Okay guys, let's get into the Fetch chart now. We've had a massive move to the upside, just shy of $2, with an explosive move to make all-time highs. And a lot of this is fuel from our accumulation and reaccumulation ranges down here in yellow. I had talked about these areas for quite some time, and of course now we are seeing the result of those ranges. We broke our monthly macro breaker here in green. This was a major SR flip from these prior highs, which was proven resistance for a substantial amount of time. So that was a major trigger that momentum was building up and we were getting very bullish price action. At the time of my prior video that I shared in December 2023, we were trading up in these highs here and ultimately testing our monthly resistance in red. However, now that is not our active monthly resistance anymore, as we have completely violated that level as well. There were a couple of areas of resistance to take note of on the way up, which price did respect to a certain degree, but they weren't really significant areas that I was paying too much attention to, because after we broke our monthly breaker and after we broke red, there was essentially nothing holding this thing from shooting to all-time highs. And it all boiled down to this little range that we had back here. When we were trading up at these highs, I had said that I wanted to see a retest of our monthly open, or at the very least a retest of our monthly breaker. I wasn't 100% sure which we were going to get, but I had said it would make perfect sense for price to retest these highs on account that we flipped it at that time to support. I'll just recap this range really quickly from that prior video that I shared, because that was a really important piece of price action that provided a huge opportunity that I talked about. So I'll just play this video for a few seconds and then we'll head back to the chart. What I would like to see is, even if price does push higher, I would really like to see a retest of that zone on a leg down. It would be a retest of the current monthly open, which sits at just 53 cents. And it would be a retest of this prior consolidation range that we had formed here, okay? And then clearly it would also be a retest of these prior highs and this high over here that we had back in April 22. So just something to consider for the near future, and would also be a great opportunity to load up for the long term. Okay guys, we're back to the chart now, and now let's look at what happened after that move. Clearly an explosive move up to our all-time high, which provided about 2 to 3x. So very expansive move, and I hope some of you were able to catch that dip. So now we need to look at this a little bit differently that we've made all-time highs, because typically when you're looking at price action and you're drawing levels, you have historical data to work with. But what happens when price enters a region that has no historical data? Well, personally, that's when I start to drill into lower time frames. Let's drop down to the 4-hour. Okay, so this is that leg up to all-time highs, and we've got this new range that has formed with our range high and our range low and our equilibrium. And the reason why it's such a large range now, we'll just drop to the daily here, is because it formed from our last swing low into our fresh swing high. So this is ultimately our new range that we're trading within. On less explosive moves, you'll see the range in a bit of a tighter format, where you get a swing high and you can take it from that swing low. Okay, so we take our range from our last swing low to our swing high, and we've got a tighter, more standard range. But with such an explosive move, if we follow the same methodology, take it from our swing low to our swing high, that forms our macro range now. Yes, on lower time frames such as the 1 hour, there will be shorter time frame ranges that you can definitely trade and are valid. But if you're sticking to the high time frame and you're looking for the next swing long, or vice versa swing short, it's better to stick to a little bit higher time frame. So we'll go to the 4-hour now. So there's not a lot of price action to work with on the way up with this leg, just very brief ranges on the way up, as I had just mentioned, on lower time frames. But on the higher time frame, the previous consolidation area is right down here, basically in our range low quarter quadrant. So looking at this, there's naturally going to be a couple different places that I would expect price to retrace to. We've clearly put in a swing high and broken bullish market structure on the lower time frame. So I wouldn't be surprised if Fetch is going to have a bit of a correction before proceeding to its next leg up. So something like this down to the range EQ, I think, is definitely a reasonable cool off period. And the vice versa would be even if we got a dip down into our previous consolidation from over here, which wouldn't even really reach the range low, but it would reach our lower quadrant range EQ that sits right here. So those are the two areas that I'm looking at right now for a bit of a retrace. Of course, if price just continues to shoot upwards and breach this high, then it's definitely possible we break the range high and continue to the upside and we surpass $2. It's definitely on the table. It's not out of the question, but just looking at this price action on the high time frame, such as the 12-hour, it looks like it could be due for a correction, okay? So looking on this on the high time frame, as I said, coming back down towards that range EQ would be a healthy correction and enough of a cool-off phase to proceed with that momentum. If the market is due for a bit more of a cool-off, then I would expect more along the lines of this lower quarter quadrant, as I said, coming back down to this prior consolidation. If we drop down to the 4-hour and look at that prior consolidation for a second, this was a very bullish structure that price had printed. We essentially made our swing high and a swing low. Price did break bullish market structure, came down, tested a range low, tested this prior SR flip that we had right here. Okay, a classic SR resistance turned into support. And then we saw price kind of fumble around the equilibrium for some time here, dipping above, dipping below, not really confirming it as an accepted level until we had this really nasty doji candle here, basically taking out shorts and taking out longs, which flushed that liquidity and then pushed for a breakout above the range high, and then it was just laddering up from there. So it could be the same case that we're seeing right now. We have broken bullish market structure, which is not hard to do, and price is pretty much going vertical, but we've got a macro range to work within now. So we have some points of interest to look at, and then we're waiting for that range low to be established so we can take it from our swing high down to where our swing low will eventually print on account that we get break in bearish market structure. Then we look at that bullish order block as an area to look to get long on a retest, and then ultimately we want to see that range equilibrium reclaimed for confirmation that we've now established the upper quarter quadrant of the range as our support and resistance areas, and then expecting that breakout. But it all comes down to this price action right here first. We want to see that range low established, which would be at our first point of interest, which could also be at our second point of interest. Just depends what the market's going to do, but we're looking for that price action, waiting for a break in bearish market structure, mark out our bullish order block in the green box, just as we saw down here in this prior consolidation. We confirmed our range low. We got a break in bearish market structure with a fresh new high from our previous lower highs. We mark out that bullish order block and we look for that retest or multiple retests, and then eventually looking for that confirmation of a reclaim of the range EQ. So as I said, nothing's different. Looking for that same price action to establish a shorter term range here. We got our macro high time frame range marked out. Okay, this one right here, which gives us our macro levels, points of interest to look at, so we can anticipate where a range low might establish itself. So it might be here at the range EQ, or it might be down here at the lower quarter quadrant range EQ off of our macro range low. Now my invalidation would be a reclaim of the upper quarter quadrant range EQ. So from this shorter term range that we've got here, range high, range low, let's assume that the low has been put in already. If we see price action like this up here, that's essentially my invalidation, because we will have reclaimed that range equilibrium and it would be a sign for continuation. We've got our bearish order block right at that level. We'll mark it in red. This last up candle invalidated by a down candle. So naturally we're coming back up and retesting that area as resistance, but we have broken bullish market structure. So I would anticipate this area to hold as resistance and put in a new fresh low closer down to our range EQ over here. So it's good to anticipate what price will do, but you need to mark out those invalidations as well. So I'm looking for a bit more of a macro cool off, as I said, a bit more of a correction before going up again. I think FET will do really well this cycle. I think it has a lot more potential still, but if you're going to trade something like this that has had such an explosive move, you got to be really careful, have those invalidations, use your stop losses, take your time on the trade. It's not going to go up just straight up forever. So as I said, kind of anticipate those areas that it might correct to, or that you think it will correct to, using TA, using, your objective reasoning. And if you miss the trade, if it does do something like this where it just continues up, don't FOMO in, don't try and buy up here somewhere, because there will be a better opportunity that does eventually come. Maybe it's over here after a little while. So, wait for those macro corrections. They do take time. They're not going to only be a few kind of days. So just trade smart, trade safely, and use proper risk management. I hope you guys enjoyed this video today and took something away from it. If you did, please smash the like button and subscribe to the channel. And I will catch you all soon. Peace.